Hello everyone, this is Kishore. Welcome back to my channel. As next week's CPI data and PPI data is coming up, I'd like to share my index analysis in the best possible cases. This is not a financial advice, just for knowledge purpose only. Let's jump to the show. Fear and Fear and Green Index, it came neutral. We know that last couple of weeks it is in the neutral. And this is sector performance, technology and healthcare perform well, and energy utilities down more than 3% as a whole. S&P 500 is up by 2.14%. And this is S&P 500 election year seasonal pattern. There is a little bit of deviation from the seasonal pattern for the current year. So if it follows it, then from the June to next year, end of the year, it is ripping higher. And this is Nasdaq composite election year seasonal pattern. Again, this is also a little bit deviation from the seasonal pattern. If it follows it, then there is a little bit of dip in the month of July, and from there it is ripping here throughout the end of the year. And this Dow Jones Industrials 4-year presidential cycle seasonal pattern, where right now we are here. So it made a new lower low, second low, and from there it is bounced and ripping here throughout the end of the year. And this June market performance for the various indices, the dotted lines were the S&P 500 election year one. So looks like the next week there is a little bit of down, and from that little bit of bounce at the end of the week. And this SPY daily chart on Friday, it's a kind of spinning top kind of candle, and the volume is good on the green side. CSI is a little bit going flat, and the RSI is a little bit curling down. Little bit of weakness on the daily chart, and there is a big dark pool at the 526 level, and it's also so good support level in the chart. And this is SPY weekly chart. The candle is good, the volume is good, RSI is good, and CSI is good. There is no weakness in the SPY weekly chart. And this RSP weekly chart, S&P 500 equal weight index. So this is having negative divergence with the SPY. So it is going down, and the volume is up, and the last week, and the CSI is going down, and RSI is going down. And this is NYSE advanced decline line oscillator, and the above one is S&P 500 large cap index. So there is a little bit of divergence last time in 2021 December and 2022 January, when the advanced decline is going down and the price is going up. Later market followed the advanced decline line. Similarly, we see similar kind of negative divergence here. Advanced decline line is going down and the market price is going up. So there is a high chance it can follow this kind of pattern, but let's see how it will do next couple of weeks. And this QQQ daily chart, Friday is again the spinning top kind of candle. The volume is up, but there is a big dark pool at the 460 level and the 451 level. If it stays above 460 level, then it is good for the QQQ bulls. QQQ weekly chart, the candle is good, the volume is good, CSA is good, and RSA good. There is no weakness in the QQQ weekly chart. And this is QQQE, equal weighted index for the QQQ. So this one also, the volume is okay, the candle is okay, CSA is going up, and RSA is going up. So there is no weakness here itself. And again, NYSE advanced decline line, there's a negative divergence with the price of Nasdaq 100 in the year of 2022 December and 2020 January. The advanced decline is going down, the price is going up. Later index followed the advanced decline line path. Similarly, we see the similar kind of pattern here. So advanced decline is going down, and the Nasdaq 100 price is going up. So if it advanced decline goes up, then it's okay. Otherwise, it can follow the similar kind of pattern. And this IWM, the weekly chart. So there is the candle is bearish candle, and the volume is huge volume. CSI is going down, and RSI is going down, and there's a big dark pool came at the after market close on Friday, like 151 million dark pool. If it is a selling dark pool, then IWM can go down to 190 level. If it is a buy dark pool, again it can jump here from 200 to 210. And this Dow Jones Industrial weekly chart. So this is kind of spinning top kind of candle, which is a reversal candle. If it is a reversal candle, that is good for the Dow Jones Industrial, and the CSI is going up, and RSI is also curling up, which is good for the Dow Jones Industrials. And this SMH, there are the three sectors that help with the S&P 500 this year to rip higher. One of them is SMH, semiconductor ETF. So option volatility for this week is 10-point move, and there is a 50 million dark pool came at the end of the Friday at 252 level. So if it is a buy dark pool, then it can easily go to the 263 level. If it is a sell dark pool, then again it may come down to the 238 level. And this XHB, this is the second sector that helped the S&P 500 home builders ETF. So right now it is at the Fibonacci level of 0.236 level. If it breaks down, then it can go down to the 95 level. If the CPI comes good, then this is one of the good sector to bounce. And this is the third sector, transportation. So this is also a little bit of down here. So the support is at 75 level. If it breaks that, then 73 is the second support level. And this is about the liquidity. The slide I shared from the Fed balance sheet. I would like to see what the liquidity in the market. So reserve balance of with Federal Reserve banks, it is the positive side. So there is a positive liquidity in the market. And also this HYG, this is the one of the bonds highly impacted or first impacted with the liquidity one, very sensitive. So if it breaks the 76.48 level, then I see the liquidity is going out of the market. Otherwise, if it jumps here, then it is good for the bulls. And this week economic report. So on Wednesday we are getting the CPI data and also the Fed meeting. On Thursday we have the PPI data. For the CPI and PPI data, I would like to share a few internals like how the CPI and PPI data can come up based on these internals. And this is another chart I'd like to share. uh, During the inflation low and high economic environment, how the various investment assets performs. So if the inflation is high and accelerating, then commodity is the only one sector or one investment asset that do good. We know that last couple of months, gold, silver, copper, all these commodities perform really, really well. And this is the components of the consumer price index. So these are the various components, and this percentages this is based on the till 2023 September 1. This is shared with the Statistica website. I'd like to share this one major. I'd like to share what time like housing sector is the major one, and then transportation and the food and beverages. The three sectors almost 80% of the CPI. Let's see how the housing and the transportation side internals are doing. So, and this is crude oil. Crude oil bounced right at the support at the 75 level. So, and it is down from the April 8th, so which is good for the CPI to calm down, cool down. And the Baltic Dry Index, it is going flat from the mid of May to the till now. So this also helps the CPI to cool down. And this is one like all formulation retail gasoline prices. So the gasoline prices went high at on April 22nd, 3.79. After that, it is going down. So this really helps the CPI to cool down or get the better than the expected output. And this is the housing one. In the housing, two parameters are very important. One is OER, owner's equivalent rent of residence, and the other one is rent of primary residence. So the below one is OER chat. It is going up. So if it goes flat or comes down, that really helps the CPI to cool down. And this is one rent of primary residence in the US city average. This is also going up continuously. And if it goes flat or goes down, then that really helps the CPI to cool down a lot. So basically, housing sector is a little bit concerned right now. If it goes down, the prices goes down, then that helps the CPI to come down. And this is another one. I'm trying to map the bond market to the Fed rates to see or to gauge when is the possible chance of the Fed rate cut. So the above one is the 2-year yield and the below one is the Fed fund rate. Previously, when the bond is going down, started going down or made a double top kind of thing and going down, then Fed rates cut the Fed rates. Again, here we made a similar kind of high here, and again now almost kind of double top kind of thing. If it goes down, then that gives a sign of the Fed rate can do very soon. And this is the bid to cover ratio for the 2-year bond. So how the 2-year bond auction is going, if it's good, then there is a high chance the Fed rate cut is possible very soon. So, and last time 2-year bond bid to cover ratio came 3.4%, which means for a this is a 28 billion 2-year bond. So for this 2-year to, for example, if it is a 10 billion bond, if the offers come 20 billion, then it is called the bid to cover ratio is 2.0. So similarly, we got right like 3.4, which is good. But if you get more than 3.1, that is really good for the bid to cover ratio. That tells there is a huge demand for the 2-year bonds. That tells there's a high chance of Fed rate cuts. And based on the current market environment, there's a high chance of 50%, nearly 50% chance of rate cut in the month of September, but not in the month of July or June. And the summary is NVC advanced decline line divergence with SPY and index shows signs of negative breadth. So there is as we see in the chart, the negative breadth can create a little bit of downside in the market side. And the dark pools on QQQ 400 million, IWM 150 million, SMH 50 million will play a huge role on direction. So if they are the buy dark pools, then they'll rally a lot. If they are sell dark pools, then they'll go down a lot. CP and PPI that is very crucial to the market. I showed the chart like what are the various assets performed during the high inflation and acceleration time. And crude oil price, retail gasoline price, and Baltic Dry Index are showing positive sign on the CPI data. As all these three are cooled down or a little bit okay last couple of months, last 1.5 months. So that really helps the CPI to cool down. And in the housing side, OER and rent of primary residence, that is crucial for CPI. So if these two data comes better than the expected or cools down or a little bit down, then CPI definitely will come better than the expected one. Otherwise, CPI it may come in line. And if it is surprise to me, if it comes above the expected one. That's all for today. Hope you like this video. If you like this video, please hit the like button. Please watch more videos in my channel. Please hit the bell icon so that you will get notification whenever I upload a new video. Please share this content if any of your friend looking similar kind of content. Thanks so much. Bye bye.